Hello everyone, and welcome to Good Morning Trading. I'm delighted to see you again. Let's catch up on the latest market news. One trader after another is out. So yesterday we had a range-bound day. I hope you were able to take advantage of it a little. I had given you the low point on the NASDAQ. The high point as well, roughly 1,750. My favorite level, bounce. We went up to 25,000, even a bit higher than that. 25,000, slightly above that. So if you were following the Good Morning Trading, it should have been a relatively easy trading day. Today's the big day. It's FOMC day, when we get the FOMC results. So as I told you in advance, we've saved a lot of time. Rates are going to remain completely stable. But we're going to have Jerome Powell's speech, and that's what's going to be extremely crucial. That's where there's likely to be volatility. In fact, the question the markets are going to ask is, how will the Fed react with a barrel of oil at $100? Will it consider this an inflationary risk? And in that case, the possibility in 2, 3, or 4 months of slightly raising rates, which doesn't suit anyone at all and which doesn't help. Fundamentally, neither real estate nor the field of artificial intelligence. Let me remind you that loans of $100, $200, $300, $400 billion are being taken out in the United States to develop artificial intelligence. A quarter point or 1% more is huge. It can cost them so much more. So keep that in mind. As long as rates are low, the artificial intelligence sector can keep growing, but if one day, and that's exactly what they absolutely do not want, the central banks, they will do everything to make sure that doesn't happen. If one day rates go up because inflation gets too high and they have to slow it down, it's going to hurt the artificial intelligence sector a lot because the founders are trying to keep their stake in their own companies. Why? To grow your business. You have two options when you're an entrepreneur. You borrow at the lowest possible rate, of course, spread it out over 5 or 10 years, and you expand. Your company and the profits it generates allow you to pay back your loan and make money, and maybe borrow again, and so on. That's how you grow. Or you sell part of your company. You give up 5% of your equity to an investor in exchange for a cash injection. So as long as interest rates are low, if you're a business owner, you tend to favor borrowing. As soon as rates go up, you start to lose some ownership of your company. Losing your stake in your own company isn't very French. That's why, for example, in the field of AI, there are difficulties in certain countries. When it comes to finding funding, France comes to mind, for example. We have major French AI companies like Mistral, where the founders and CEOs are minority shareholders in their own company because they had to sell off percentages of their business, 5% to bring in cash, or giving up 10% of their company to raise funds. Meanwhile, in other countries where it's much easier to raise money because you have investors and a completely different level of dynamism, things are different. The founders of these AI companies still own 60, 70, 80, 90, 95% of their company in their own name. They were able to raise and borrow money on the markets. You see, it's not the same thing at all. I went off on the AI tangent. It's still live. I don't have. No teleprompter. No pre-written text. Even when I hit the play button, I have no idea what I'm going to say to you, except that I'm going to analyze the charts. But I had absolutely no intention of talking about AI. So let's refocus a little bit. Yesterday, all the markets held up well. It feels like they're expecting a rather favorable, rather reassuring FOMC. And then we've had just a few signals from the FOMC, for example, saying that a $100 barrel is being considered in a historical context. Okay, what does that mean? Well, that $100 has already been much higher before, and with the prospect of an oil shock. What does that mean? If we compare 1974 to 1979, the two oil shocks, there is absolutely no problem. Currently, with a barrel at $100, this is not a long-term structural increase, since other countries are starting to reduce their production by a little more barrels to compensate. And besides, it's not the same thing at all, because the United States of America, the world's leading economic, industrial, financial, agricultural power, etc., 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 absolutely does not need a single drop of the oil that passes through the Strait of Hormuz. They are, if they so wish, completely self-sufficient. Are Western countries the same? We don't use the Strait of Hormuz as a supply route. The only countries that have issues with this are the Asian countries. And here we got some good news. Last night, let me show you the charts. If we started ranging, there, we're on the NASDAQ. If we started ranging on, we bounced. On the 24th, 1750, we basically stabilized for hours around 25,000. And now our NASDAQ is back at about 25,180. It went up 0.75. Well, actually, it's written here. I can do the math. Sometimes I get it wrong, but it's written here, plus 0.67. I was going with 0.75. So plus 0.67%. Why? Because there's been some easing in the Asian markets, both Japanese and Chinese, since they're realizing that, all things considered, the Strait of Hormuz isn't mined, the Strait of Hormuz isn't blocked, and we still have supertankers passing through from time to time. So the situation isn't as dramatic, of course, as the media, who thrive on people's anxiety, wanted us to believe. So, as a result, there's been a real easing. Asian markets have gone up, and that's pushing all the indices. You can see all the European indices and the American indices have all gained over 0.5% overnight thanks to that. We also have two pieces of good news on the airline front. I'll show you on the Dow Jones. The Dow Jones is climbing too. Airline companies have bounced back. Delta and American Airlines have gained 6% and 3.5% respectively. Expedia Group has also made gains, honestly. So the travel sector, which is usually heavily impacted by war, just as a reminder, for example, Dubai is one of the most important hubs for dispatching travelers from all over the world who want to spend. In fact, it's the same things they find at home, since we're globalized. That's something that surprised me a little. That's just my romantic side. When I went to Indonesia, when I landed at the airport and in the capital, I felt like I was in a European city. They had the same brands, Zara, McDonald's. I was expecting something exotic, something like that. It was more complicated. You had to go into the jungle to find a bit of exoticism. But jokes aside, well, it's not even a joke. It's more of a protest, a sort of campaign, a protest of observations. I'm a little saddened by this uniformity in the end. But still, this uniformity also makes it possible to feed the entire world population. So it still has some serious advantages. Especially now, right? Did I tell you that Uber also has a success rate of 4.2%? No, I'm telling you because Uber made a big announcement. Next year, they're going to develop a fleet of robotaxis with vehicles equipped with NVIDIA's autonomous driving software. You see, artificial intelligence. So for guys like me who grew up on Star Wars when I was 7 or 8, I really feel like I'm living in a science fiction movie now. I have a robot that automatically cleans my floor. With my iPhone, I just press a button and it cleans everything, avoids the couch and all that. The only time I ever saw a robot by itself, and we didn't even know what it was for, was on the Death Star. At one point, there's a scene, you'll see if you watch, there's a robot that goes by, white if I remember correctly. We have absolutely no idea what it was for, but actually, that was it. It was cleaning the Death Star. And now, we're going to see fully autonomous taxi robots with no driver. To me, that's straight out of science fiction. I'm just waiting for the release of the Jedi lightsaber, of course. At that point, my life will be completely fulfilled. I'll have a robot that cleans my floor, never goes on strike, never complains, doesn't watch TV, and doesn't eat my chips. Pretty crazy, though. Compared to what I've known, having a fully autonomous taxi will be amazing. No need to make conversation. Taxi drivers who get bored, that's going to be such an incredible relief. Hello, sir. How you doing today? There we go. It starts, and all I want is to relax and be alone. No, that's just not possible. Oh, I'm doing well, and you? And then it's just blah, 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 blah. And there you go. It takes half an hour. So after that, you know all about their family history, and when they ask you to pay, you say, 50 euros for the ride? Okay, but listen, I'm charging 50 euros for the therapy session I just gave you by listening to you. No, it doesn't work like that. It just doesn't work like that. And on top of that, we're going to have sabers, Jedi sabers. Well, this might be the end of humanity. We're all going to savor each other, I think. But anyway, I want a blue one. I want a blue saber. I don't like the red one. More seriously, let's get back to technical analysis, because if you let the live stream go, you never know where it's going to end up. Me neither. I have no idea where this is going right now. I'm feeling hyped. It's going all over the place, but it's pretty fun. I think that's why you like the good morning trading. It's a trader talking to you. It's not a financial analyst who's never placed a trade in their life or anything like that. There you go. That one slicked through. Dow Jones, 47,500. It's moving above the monthly support. Technically, let me show you, we have a perfect Dow theory set up. The lows keep getting higher, and the highs keep getting higher too. We're about to cross the monthly middle air. We're about to have a perfect month of Dow theory on the Dow Jones. You can really feel they're ready to take off. They're in the starting blocks. All it takes is for the Fed president to say, the weather's nice today, and boom, it goes up. The NASDAQ is at its highest almost for the past 15 days. You can immediately see that the target is the monthly pivot, and we might reach it, maybe even before the Fed president's speech. The S&P 500 is following as well, which is really good news. It's above its monthly support, above 6,800. That's a sign of strength, and we don't have a S&P law. We have a Dow law for it too, so everything's fine. The CAC 40 has gone above 8,000, yes. We almost didn't believe it anymore. Amazing. Well, actually, no. Come on. I was hoping a little. It's above 8,000. Let's enjoy it. DEX 40. Same thing. Above 23,800. Above its monthly support. It's going to go for 23,400. Almost at the 15-day high. Go ahead. I feel like I'm commentating a cycling event. In any case, he's really pushing on the pedals, and it's magnificent. So, since everything is going well, what do we have at the lowest point? Well, yeah, gold feeds on bad news. Speculation on gold is that we didn't know it would go up, and over there, as we realize that things are actually going well, it's going well. The state of the world isn't. We're just 1 minute, 1 hour away from the end of humanity, a reference to the famous doomsday clock. So it's not that bad, and now we've moved to 1 hour and 2 minutes from the end of times. So there you go. It's a little bit reassuring. So gold itself remains stuck on its monthly pivot levels and its 5,000 mark. We've been in a range all week. For now, it's hard for it to get back above 5,100, for example. There would need to be a major event, a problem in the Gulf or in the Strait of Hormuz for it to bounce back there. For now, there's a strong compression. And over 2 months, well, it's stagnating right in the middle of its range, our friend Bitcoin. You mentioned 75,000. That's going to be hard to break through. It hasn't managed to stay above 75,000 or above 74,000. But be careful, look. Yesterday, we hit 75,000 4 times, and 4 times we got knocked back. There comes a time when even the strongest resistances can give way. There has already been a huge battle at 75,000, and if we go back to 75,000 again, once, twice, 3 times, that'll completely discourage the sellers, who will move to 77,000 at a very nice level of 17,500 with the monthly resistance. It would make more sense for them to take fewer risks and try to catch the early buyer scouts, who would ride up to the monthly resistance and start singing. So be careful, because resistances in the stock market are a bit like the gates of a fortress. If you keep banging on the door from time to time, eventually the door falls and the enemy can rush into the castle. Right now, we've been hitting 75,000 for 48 hours straight. It's a huge level to break through, but the more we hit it, the weaker that 75,000 becomes. So be cautious with this resistance. And that's also what explains why the LA took off overnight. What really helped the Asian markets is that we've seen a drop in the price of a barrel of oil. We were stuck around $100 and now we're at $93. We've lost almost 10%. Like I said, $100 is acceptable, $75 is ideal for everyone, and $90, the oil producing countries are happy. Very happy, actually, but it's not extremely inflationary for the buyers. So if we stay at 90 during the conflict, and then at some point, every conflict ends. In the worst case scenario, we've seen it in Europe. The Hundred Years' War didn't actually last 100 years. It was a little less than that. But there you go. Every conflict eventually comes to an end. And in those cases, the price per barrel will probably end up around $70 to $75. It will return to that level in a first phase, and then maybe later drop to around $65. We'll see a normal phase again, so that's why the indices are showing this. That's why the market is rather, let's say, optimistic. You can clearly see it in the prices. This morning, the price per barrel is dropping, which means a barrel at $93 or $90 is inflationary. That's actually not true economically, so it reassures everyone a little, because right now we're really at the peak of geopolitical tensions and risks. In the end, the price per barrel isn't at $150. The price per barrel isn't at $200. You promised us the Revolutionary Guards. No, it's at $93. That's Gerard, my friend. That's Gerard. There you go. Listen, I wish you a great day of trading. Be careful. I'm not going to repeat what I've already told you. Monday, Tuesday, and every day before. And on the eve of every FOMC meeting, and a few hours before the FOMC, it's a market that's a bit strange. The order books are pretty empty. Nobody takes a position a few hours before the speech of the master of the world, the speech of the Fed chairman. Nobody takes a position. So be careful. There are market anomalies. What are these anomalies? There's some rather strange candlesticks that appear. When a big player enters or exits, there are fewer Yamaha liquidity providers, there are fewer people in the market, so it absorbs large volumes less effectively on an order book. So you get these weird little wicks that come and hit your stops. And then you get paranoid, or they come and hit your take profit, but you still get paranoid. That's completely normal. You're an excellent trader, or maybe you just got lucky, or the market was just in your favor. That's all. So send in my regards. See you tomorrow. It's going to be a bit more exciting so we can trade. I can't wait for Thursday and Friday so I can trade normally. What, the same volume as usual? Because right now I'm in pause mode. Well, actually in extremely slow mode to let things settle. Let the FOMC pass. Send in my regards. Take care of yourselves. That's it. That's already great. Have a good day. Ciao, everyone.